for right now, why this is important right now is because there's so much volatility in the market. And the more that we're able to save bets, the more we have in our accounts and the more we're able to make progress later on when conditions improve. The last thing that we want to do is to waste money. That's one of the things, or one of the principles of what saving bets can do for all of us. So let's get the show on the road. Let's get things started over here. So saving bets, what is it and why is it so important? It's actually one of the things that I go over in my new book, The Trading Mind Wheel, that's available right now. But it's uh, the purpose of preventing bet or saving bets is to prevent unnecessary drawdowns. Well, we don't want to have unnecessary drawdowns, and there's necessary and unnecessary drawdowns. So let's talk about the difference between those two ideas: necessary versus unnecessary drawdowns. Every single system will go through periods of drawdowns. You'll have losing streaks in every kind of system. It's uh, depending on what the win rate of your system is. Let's say that you have a system where your win rate is 50%, right? That's a reasonable win rate. And if you're winning bigger than you're losing, then you can do exceptionally well with a system like that. If your average win size is, say, 10% and your average loss size is 5%, then that system will crush it even with a 50% win rate. Uh, but with a 50% win rate, you'll have periods where you'll be on a losing streak. Over a 100 trade period, you can expect to lose about uh, 50%, about 8 trades in a row with a 100%, with a 50% win rate. 8 losses in a row. That sounds like a lot, but that's part of the necessary drawdown in the system. Why? Because the math just works. An unnecessary drawdown would be where you're doing things like this. Like, let's say you are chasing trades. Let's say you are taking random trades, things like FOMO, things that can be very prevalent in an environment like this where there's all this volatility. One day the market's down 2%, 3%, like it's down right now. Then the next day it rallies. You think that that's the bottom. Let me go in. Maybe I heard something on social media. Maybe heard something on YouTube. Maybe I read something or heard something in the news, and you're kind of all over the place trying to chase gains. That's not the way to do it. What we want to do is to save bets, taking the random trades, right? Taking trades that are outside our system, outside of something that we would normally operate, outside of whatever our edge is. That's what taking random trades is. And also, saving bets helps us from giving back profits, right? Well, we work so hard to make the profits that we have. It would be terrible to give those profits back, because then rather than compounding gains, we're digging ourselves out of a hole. Or even worse, we end up compounding losses, and where that's really the worst thing that can happen. So here's a snapshot of where the S&P 500 happens to be. That I took the screenshot yesterday, but you could just see the random noise in here. Well, you're really all over the place, all over the map, and it's in this where people tend to blow up accounts. People tend to uh, chase trades. People tend to have all types of FOMO, and uh, that's where this notion, this idea of saving bets comes into play. So there's really two ways to save bets. The first way is to only take A level setups. And we'll go through what a quote unquote A level setup is in a moment. The other way is to get risk off the table as soon as possible. And we'll go into great detail into this as well. So, what is an A level setup? Well, let's talk about what an A level setup is not. An A level setup does not have to be a chart pattern. It doesn't have to be fundamentally based. It doesn't have to be related to the news, to the Fed, or to any other catalyst that you can think of. So here's a quick story. A quick story from someone I know. His name is Chris. Uh, Here's a story. So your setup can be you get notified on your phone, right? There's an alert that goes off. There's somebody that said something on Twitter, on StockTwits, on whatever you happen to be following. You get that idea. You believe in what this person has to say, and that they said that the stock XYZ is breaking out. Great. So you go, you take that trade, you put in some part of your capital into that trade, and that is Chris's setup, right? Getting some kind of random idea from somewhere and then going off and executing it. That is his setup. The setup is really anything that causes you to take action. So, if a setup is the thing that's going to cause you to take action, then wouldn't it behoove all of us, regardless of whatever kind of style that you're trading, to have an A level setup, have something that is very well defined, that over many, many trades will provide you with an edge? Of course, right? Kind of should hopefully go without saying. Uh, will you be sharing a presentation? Oh, I thought that the presentation was on. Yeah, let me know if you're able to see the slides. The slides look like they are up on my end over here. It should be up on yours as well. Yeah, let me stop sharing the screen for a moment just to make sure. Yeah, Mukhtar, let me know if you're able to see. Now I stopped the presentation. Let's try to get this up here again. So here is the slide deck. Ah, okay. So will I share the slide deck after? No worries, Mukhtar. So, sure. If you want a copy, if you want like a PDF of the slide deck, shoot me an email later on. Mike@marawealth.com. Okay, so where were we? So yeah, Chris's story. Uh, you don't be like Chris, right? You have an A level setup. That is the moral of the story. So, what is an A level setup? What constitutes an A level setup? How do we get these? Well, if you're going to have an A level setup, it should be something that's measurable. It should be something that you could repeat over and over and over again because that's part of what's going to give you your edge. It needs to be something that is clearly defined, and it needs to be something that when you do play this out over many trades, if you trade this A setup 100 times, that over 100 times, you're going to come out with more money at the end of it. So, how to find your A level setup? There's plenty of ways that you could go about finding an A level setup. Uh, the first one, and this is precisely how I went about finding my A level setups. First is to study the greats. Next is to model their success. And then finally, you want to customize their process to fit you. And that last part there, that's absolutely key. You want to, and that's pretty much what all of them did. All of them found some methodology that worked, that they learned it, and then they fit it to their style, their beliefs, their objectives. So here are some of the books that I started with. The first one, Market Wizards. If you haven't read Market Wizards, highly recommend that you do because Jack Schwager went off and he interviewed the top traders on the planet, and uh, they share their process, their systems, their beliefs, everything in there. So one of them is bound to resonate with you. Long-term traders, short-term hedge fund managers, all different types. So if you haven't read Jack Schwager's Market Wizard series, definitely start there. Then for me, the wizard that resonated the most with me was William O'Neill. I went and studied his work, How to Make Money in Stocks. That book made so much sense to me. Then later on, excuse me. Then later on, I went and studied Mark Minervini's work. Mark took William O'Neill's work to a whole nother level, fine-tuned the process, started to look for sharper patterns in there, presented ways to swing trade the strategy and swing trade it effectively, talked about all different types of risk management. And then, of course, there's my book where I had already studied at this point the people that are here, but also studied more about risk management, studied more about trading psychology, studied more about systems, studied more about journaling and post analysis, all these different skills that are inside the book. And the book itself shares with you how to customize the process to fit you. Uh, Whoops. There goes the slide deck here. Where were we? Let's get this back over to the level setup. All right. The A-level setup template. Get this back over here. Perfect. All right, so the A-level setup template. Now, the A-level setup template, I'm going to share with you how I view A-level setups. And the template that I'm going to share with you is actually a bonus that you'll be able to get when you get the Trading Mind Wheel book. Trading Mind Wheel is available pretty much everywhere books are sold right now. So what is my A-level setup and the template to follow? So I'm going to share this spreadsheet with you. Let me just drag this over here. Let me know that you could see this okay. There's a lot of words on here. And why don't I make this a little bit bigger too, so that way you could hopefully see it a bit better. Let me know if you could see the spreadsheet okay. It looks like it's showing up on my end. Let me know that you guys are able to see this. So, okay, great. When it comes to your setup, the thing that's important is coming up with a level of granularity, that clear definitions, and this is something that really goes deep into how you can properly define your setup. Now, your setup might be anything. It doesn't necessarily have to be, well, what we've got on the screen right now, right? Pull back, cup with handle. Those are technically base setups. You might have something that's completely different. You might have something that's only fundamentally based. You might have something that is based on a certain trend or whatever it is. That's all fine. What's important is coming up with clear definitions. So, for example, for me, pullback buys. I'm looking on the daily time frame. The length of bars that's needed for the pattern are anywhere between 7 days and 5 weeks. So I'm looking at the amount of time that it takes for one of these quote unquote A level setups to set up. Then the amount of bars below the pivot. The pivot is where I'm looking to buy. So sometimes, and you'll see an example of a couple of examples of what constitutes this A level setup for me. They tend to hang around below the pivot, the place where I'm going to enter, between 3 to 5 days minimum. So that's how that part worked its way uh, into the definition. The depth, I'm looking for 7.5 to 20% depth near the pivot, 3 to 7.5. So, like you're seeing, like it's the length of time and it's also the depth of the pattern. Put that in there. Then I'm looking at the general look and character of this thing, and you can make these little bullet points for yourself too, right? So in this case, it's pulling back to 21 EMA, 50 SMA. Like I like to use these types of moving averages, looking at the slope, looking at the general price action, looking at the volume profile, looking at all these different things. Another thing that I'm looking at is the market type, right? We don't want to just look at the trade that we're looking to get into. We also want to consider the environment of the trade that we are looking to take. So whatever that means for you, have definitions for both, not just the trade itself, but also the market environment where you're looking to get that trade. Then, right? Boosters. What are boosters? Boosters are things that a trade doesn't have to have, but would be great if they did. And if you clearly define what your types of quote unquote boosters are, then that gives you a much better way to identify something that is a pretty good trade from one that is absolutely outstanding. And boosters are a great way to do that. So those are some of the boosters that I like to look for when I'm looking for this particular pullback buy setup. And then finally, the last part of having your defining your A level setups is having models of them, have multiple models of them. Here's a few, right? So let's bring this one up here. Zscaler. So this here is an example of one of the A level setups, right? So this one pulled back 15%. It consolidated over about 7 weeks here. It pulled back to the 21 EMA and the 50 SMA. The relative strength line was outperforming price. The stochastics are turned up, and volume on the down days is declining over here. All the elements that I like to see in a pullback buy, and this is what one looks like. So when going whenever I'm going to look at another pullback buy lot, like if I'm looking for ones right now, and let's say something catches my attention, it's like, oh, this one looks pretty good. Well, I should be verifying that, right? And if we have models set up where we could go and begin to verify, well, what a good one looks like versus what we're looking at, then well, we could see how closely is what we're looking at right now fit the model that we have of one that worked out. This is one of the best ways that you could go about um, saving bets, because remember, what's the objective with saving bets? Well, the objective is we don't want to do dumb things with our money, and uh, by having clearly defined setups, we're able to prevent ourselves from taking random trades, chasing trades, from taking trades that are of poor quality. And if we're able to save money in that way, it's going to help us to, one, not dig ourselves into a hole, but two, be able to compound a lot better. Let's get back the to this here. Okay, so the other thing that saving bets is going to do for us, it's going to help us get risk off the table ASAP. Now, there's two other things about with this, right? It does not mean taking off a trade the moment that it starts to move against you. Um, it uh, it also does not mean that uh, it does not mean trading small, right? So if it's not taking risk off the table the moment a trade moves against you and it has nothing to do with small, then what in the heck is it? What it is, it's understanding how your top performing setups behave after triggering an entry. Like, well, understanding, well, what's normal versus what's abnormal. And that's where having all these different types of understandings and skill sets and really digging into your trading starts to help you and starts to help you have real results and in varying market conditions like we mentioned before. um, how to take risk off quickly without getting shaken out of your best trades, right? So uh, we want to take risk off the table, but we want to take risk off the table where we are not aggressively raising a stop, where we're not aggressively choking off a trade, because we want our biggest winners to be able to work for us. If we choke off the trade too quickly, then we could be losing our biggest winners, right? This is a big part of where the notion of FOMO comes into play, right? Well, what should we do? I don't want to miss out on my big winner. I don't want to miss out on my big winner. So I think I'm just going to hold this trade, right? And then it goes against us a little bit more and it goes against us a little bit more. And before you know it, well, it was a 10-15% gain. Now all of a sudden is a 2% gain or turning into a loss, right? So there's a few things that we need to know about taking off risk quickly without getting shaken out of the best trades. We need to know how far do they pull back below the entry price, right? That's an important question to ask yourself. How long does it take before the trade starts to move? And what are confluences are there in common? What confluences are there in common? So, how do we figure all that stuff out, right? Like, it sounds great, but how do we figure all that stuff out? What do you think? How do you think we figure all that stuff out? If you have an idea, post it in the chat. There's a couple of ways that we could go about figuring that out. Those ways are all discussed in detail in the Trading Mind Wheel book. But the skills that are needed are going to be journaling, post analysis, and testing, including factor modeling and back testing. This is where the notion of having multiple skills and the idea of having 8 essential skills needed for trading mastery really comes from. Because how do you go from being brand new to be able being able to execute confidently and being able to execute almost at a subconscious level where you're just able to go and do it and produce great gains. Well, it's being skilled in each one of these areas. How do you deal with losing streaks? How do you deal with FOMO and things like that? It comes from mastering all these different skills. And so, if you are journaling and if you know how to do post analysis and if you know how to do testing, you're able to go back through your prior trades. Right, go back through all your prior trades. So you have your trades listed out in two different columns, right? All your wins, all your losses. You'll be able to go through your wins and see, well, what are the common factors among the wins? You'll be able to go through your losses and see what are the common factors among the losses, and you'll be able to start to reconcile those, and you'll be able to have very clear understanding of what should I not do and what should I try to do more of. And so doing all this helped me make an extra 20% annually, right? 20%, that like that's a huge number. And so I'm going to walk you through the exact process that I did. So let me get that spreadsheet back up over here. You guys still see the spreadsheet, right? So let me walk you through this spreadsheet. So I have all of my closed trades here. That's something else that I like to track too. I track every single trade that I take, and I'm tracking all these different things, the entry notes, sectors, all these different things. And so what I did was I went through all my winners, I went through all my losers, and a couple of things started to jump out at me. The first thing that jumped out at me was that the stocks that of my biggest winners, the ones, the trades that really worked very well and worked almost immediately. Uh, the biggest winners almost never pulled back in below the entry point. A few of them did, but for the most part, they did not. And then that got me thinking too. eh, for the biggest winners that did pull back, oh, where did they pull back to? And how long did they pull back for? And it got me these three key characteristics. The first one is they did not close below their 10-day exponential moving average. Did not close below the 10-day exponential moving average. The second is they did not violate a previous day's low. And the third was being below either a whole or a half number. So those three things, the combination of those three things over all those different trades led me to this extra 20% annually. And in 95% of cases, they did not violate those three things. They did not violate the the 10-day exponential moving average. They did not violate uh, the day's low, and they did not violate uh, the whole or the half number. And the times that they did those 5% of times, they that ended up being worth the sacrifice, because in the other 95% of times that they did, I was able to cap so many different losses over time, right? So instead of taking a full 1R loss, or let's say it was uh, a loss of 5%, right? So instead of losing 5% on a trade, I will be losing 2.5% on a trade. Well, you take that over 50 trades, and you end up with a monumental impact on your overall performance. You win by losing less. You have less of a hole that you need to dig yourself out of because you've lost so much less in your trading. And that's what helped me generate an extra 20% annually by doing this process by saving bets. And so all that is covered in the Trading Mind Wheel book. There's a lot more that's covered inside the Trading Mind Wheel book. Uh, the book is available now. It's on Amazon. It's on Barnes and Noble. It's on Books a Million. All these different places, basically wherever you could think of to buy books. Target, Walmart, and just for buying the book, just for pre-ordering the book, you get there's loads and loads of bonuses. The ones that we already spoke about, but there's also these other bonuses. One of which is free access to this virtual conference that we're holding on April 4th. Full day virtual conference with all these great speakers here. Myself, Jason Greystone, Adam Sarhan, Akil Stokes, Anthony Credelli, Austin Silver, Jim Ropel, Pat Walker, and our own Stuart Chalmers. And just added today, Mark Minervini is also going to be making an appearance and doing a fireside chat to close off the conference. So you're going to get access to all that for free just by pre-ordering the book. So you could go to tradingmindwheel.com. I'll put the link in the chat for you guys, and you could go there and get the book. So let me know what questions you guys have. I'll stick around for a few minutes here to answer any kind of questions that you have. Yes, to answer Mokhtar's question from earlier, will the presentation be shared? The presentation will be shared. Just message me, shoot me an email, mike@marawealth.com, or send me a direct message on whichever social media platform you happen to be following me on. I'm all over the place. Instagram, Twitter, StockTwits, Facebook, LinkedIn, all these different places. Yes, you could go get the book on tradingmindwheel.com. All the bonuses are there as well. Can you see the? Yeah, here's the website. Trading Mind Wheel website. So Mark actually wrote the foreword for the book. Said wonderful things about it. Like it really is very touching. You know, like I wrote this book only like 5 years ago, trading part time. Started trading full time 5 years ago. Trading now for 25 years altogether. But it's been an absolute incredible journey. To get endorsements from him, to get endorsements from Mike Webster, who was Bill O'Neill's right-hand man for many, many years, Leif Sereda, another 2019 U.S. investing champion, and so many other people have had such great things to say about the book. It really blows my mind how much people are loving the book already. Question from Mukhtar: what confirmations and triggers do you use for a retest entry? So, well, when a stock breaks out, and let's say that the breakout fails, then or what I like to do is I'll wait for my setup. Well, one of those setups that we were talking about before. Let's bring back the spreadsheet. So I will wait for one of these setups here to present themselves. So I'm not in the business of trying to get back into a trade just because it's working. If the trade breaks out, that breakout fails, then I want it to set up again, and it's getting reevaluated versus every other trade that is currently available. And here's another part of the evaluation process. So the stock has to meet all these different things, right? Well, we spoke about that. Then, well, once the trade comes onto my radar and it's past this part of it, another thing that I'll do is I will go over to uh, my blog, marawealth.com, and I'll come up here to links and I'll go to Trade Gauntlet Calculator. Now, this calculator is it's basically a weighted average checklist of all the different things that I find important in a trade. And I'll go through the this list and I'll see how many boxes am I able to check. Once I go through the whole thing, it'll generate a score. And if the score is above a 7, then that tells me that it's got 70% of the things that I'm interested in. Great. So that's a trade for me that's worth taking. Anything below a 7, I won't take. And the reason why, Mukhtar, is because when I did another post analysis of all my best trades, right? So going through uh, the my trading journal and going through and seeing, well, which trades were the best and what was common among them. One of the things that I found out was that all of them, right? Like not 90%, not 80%, not 95%, not 99%, but 100% of them all scored above a 7. All the best winners scored above a 7. Great. So what does that allow me to do? That allows me to goes back to our presentation, allows me to save bets by not wasting time on stocks that like back here, right? Like 6.5, right? 6.9, 6.68. It's not that there's no winners that were under a 7, but my best winners were all over a 7. So I just eliminated all those trades, all those unnecessary trades. So that's where having a strong journaling skill, having a strong backtesting skill, having a strong post analysis skill starts to really come into play and to help us to continuously improve. And if we're not skilled in these areas, then we're leaving a load of money on the table and it makes us it that much harder to continuously improve. Great question. Another question from Mokhtar. How can you get better at timing retests? What do you mean by timing retests? Oh, is that the one that I answered earlier? Yeah, I think that was yeah, that's well. Let's answer that question from another angle. How can you get better at timing retests? So here's what you would do. First, you would go back to your journal and you would start to come up with a definition of what constitutes a retest, right? What constitutes a retest? Well, what's some of the best retests that you've seen? Which are the retests that you've taken that have performed the best, right? Then you come over, you add that to your model. Great. Then, when you start to take future retests, how closely do those retests fit your model? And then that'll allow you to build more of a library that helps you to see what's a great retest versus what is a kind of a so-so retest. Very good question. Let's see. What other questions do you guys have? Again, the Trading Mind Wheel book is available for sale right now. It's available on pre-order right now. It's on Amazon, Barnes and Noble, Target, Walmart, pretty much everywhere on the planet where books are sold. And you get loads of free bonuses with them. You'll get access to my setup templates. You'll get the free virtual conference. There's loads of bonuses being added. And Mark Minervini is also going to be one of the speakers at the conference. I just found out, and so need to update this graphic here. But Mark is going to be part of it as well. All right, so Mukhtar, you are welcome. All right, guys, looks like that is it for questions. If you have any additional questions, feel free to reach out to me on social, drop a comment if you're watching this on YouTube or Facebook or Twitter, LinkedIn, well, wherever you happen to be watching, and let me know. I'm always very happy to help you guys. I want to see you succeed, and that's a large part of what drives me and why I wrote this book in the first place. So that way you don't have to go through the kinds of uh, pains and turmoil that I went through. And that's really what the purpose is. So thanks again, and I will see you around. Take care. Much love. Peace out, everybody.